Hello, everyone. Welcome back to Voice of Super, ASFA's podcast for the superannuation community. Well, it is less than a month, because this year is flying, I don't know how, until our investment summit in Brisbane, where we have a lineup of speakers and sessions that you will actually not find anywhere else. I'm really proud of it. There are still a handful of tickets left, and two of the speakers joining us there, leaders in their fields, also join me today on the podcast. I've got Andrew Lill, the CIO of legalsuper. I was going to say recently appointed, but it was actually back in March. So again, to the year flying. And Marigold, look, who's the Executive Director of Infrastructure at IFM with a focus on low carbon infrastructure. Today, we're going to talk a little bit about what they're going to discuss at the Investment Summit, but I want to get under the bonnet of how decisions were made on Liberation Day and what Marigold's looking at really in low carbon infrastructure investments, and how the moves in the US really affect what she's doing in her day-to-day work and what she's discussing with investors. So let's kick off. Andrew, you must have your tail in the air. Firstly, you're now at legalsuper after a long career in the sector, and legalsuper has delivered some incredible returns. Tell us about what you've been doing there, and particularly I want to talk about what investment teams do on days like Liberation Day and the lead up to it. I certainly witnessed, some of that decision making in the lead up to and the experience of the pandemic. It's fascinating, and I think people will be really interested in it.
Thank you, Mary. Great to be on the pod. As an attendee at the ASFA Investment Summit last year, I loved the combination of external speakers and really great investment discussions amongst those who are prevalent in the superannuation industry. So I'm looking forward to this next one and looking forward to be part of it. Thank you very much. At legalsuper, I'm really just trying to continue the great work that's been done by previous investment team members and the investment committee that's been very stable over the last 5 to 7 years. And I think the performance that members of legalsuper have achieved this year is testament to all that great work, because actually, most portfolios take 2 to 3 years to really get built. And I think the work that was done post-COVID towards delivering the results for the last 12 months, where legalsuper was top of the league tables, is really testament to that great work that's gone on in the past. Now, you mentioned Liberation Day, and actually I joined legalsuper about 3 weeks before Liberation Day, so I had about 3 weeks to get my feet under the desk and then put in place some of the process and investment discussions that are really important at times like that. And I would just say, for most investment professionals, this is the time when you go from doing your deep analysis, your sort of training, if you like, in a sports context, to actually going on the field and competing, and where the match really begins. And I think that while some of the circumstances that we're actually dealing with can be quite challenging and for members can be very concerning, this is the time when investment teams come together and deliver what they've been practicing. So first thing, it shouldn't be anything new. You should have practiced so that when you go onto the field, you know the roles that you're going to play. And as a leader, as a CIO, my job is to try to bring together 3 things. Culture. So how does the team work together? How do you have an open, inclusive environment where everyone's views is regarded and brought forward to the table? Second thing, governance. Know what you're delegated to do. Know what information you need to provide upwards to get agreement on, and keep the information flowing. And the third one is technology or data, because it's really important in most complex multi-asset portfolios that super funds invest in, that you know all the different parts of a moving piece. It's a living, moving beast of a portfolio that every day, every time you wake up in the morning in Australia, it changes. So know what you have and know where you're invested is really important. As to that next step, look forward to bringing more conversations to the table at the summit.
Well, yeah, culture, governance, data, really good key takeaways there. And that data piece, not so much sometimes a lack of data, sometimes an load of data too, isn't there? And so you got to kind of sort it out. And so, Marigold, let's come to you, because you focus on low infrastructure investments. So at this time, you're obviously doing some long form work on where that sort of landscape is going. But if we look at that kind of lead up to Liberation Day, you're getting calls from people in the likes of Andrew's position and some of your other contacts about what you're seeing. No doubt you're a feeding to the data there as well. Can you talk to us a little bit about your job and your role in that sort of decision making?
Thanks, Mary. Great to be on the podcast today. Thank you for inviting me. And I look forward to joining the ASFA Investment Summit later this month. I was on your question around, I guess, how we in infrastructure with an infrastructure lens. So I come from the infrastructure equity investment team at ASFA Investors and have been part of that team for coming close to 20 years. In terms of how we have, I guess, provided input into decision making for CIOs like Andrew and his teams at our super fund investor groups. Our role in that is looking at it from the infrastructure portfolio lens, and with infrastructure, we take decades, multiple decades long view in terms of investing in infrastructure. And with that decades long view, as well as combined with our track record and history of investing in infrastructure. So we have that data, we have that track record of 30 years of investing in infrastructure that is quite telling and informative when thinking about decisions for that next 30 years. And what that has shown is that infrastructure as an asset class is very resilient across macroeconomic as well as political cycles, and that provides input into decision makings around portfolios, even in geopolitically uncertain times, as we experience obviously with Trump and his policies and tariffs. And so what our historical analysis shows that infrastructure is resilient across all different types of macroeconomic, what we call seasons. And I think this is no different to a period we're going through in terms of the impacts of tariffs and what that might mean from a macro perspective. Of course, economic forecasts for the US are now much lower. There's still uncertainty in the environment, and we think infrastructure will continue that resilience and perform well during this quite volatile period.
And you particularly look at low carbon infrastructure. So I agree with you. Obviously, as an asset class, it's got a long run, and it will likely be okay in the long run and outperform. How do you feel about the ability to bring on new assets in that low carbon environment? Even looking down the pipeline at emerging tech that you might not be investing in right now on behalf of the likes of Andrew and the other super funds, but you need to come online, don't you? And so you've got this sort of political environment where you need the advancement of tech. You need a really robust sort of ecosystem in order to then pick up those assets later on when they're more appropriate for the long-term investment and the partners that IFM's got. So there must be something that sort of clouds when there's that sort of political volatility going on.
Yeah, so as you noted, I'm focused currently on low carbon, what we call low carbon emission assets, essentially investing in the energy transition and infrastructure that either drives or supports that transition to net zero over the long term. So when we think about the current policy environment, obviously the US under Trump has moved towards some policy uncertainty and changes to supportive policy for renewable energy. But despite that, we still maintain a very positive outlook for investing in renewable energy and the energy transition more broadly, which, as you rightly pointed out, there are aspects of innovation and technology that's still advancing to support that transition. But certainly the big part at the moment in terms of that transition is renewable power. And despite sort of the policy movements, that have occurred in the US to wind back tax credits, for the renewable energy sector, there are a number of reasons why we maintain a very positive outlook, particularly in the long term. One of which is that the climate science hasn't changed despite political changes, and there's strong momentum around transition, and then that's been led a lot by the corporate sector more so than governments. And then secondly, governments are very focused and thinking about energy security. So, policies, particularly in Europe, for example, are very conducive to investment in renewable energy and energy transition for that reason. And then thirdly, and what I see as a very big theme that will drive growth for renewable energy in that sector globally as well as in the US is that we're in the digital age. We're in the age of AI. And the digital economy is a very power hungry and energy intensive economy. And so, no doubt, all of us have done a Google search or a ChatGPT search probably in the last 24 hours. So I guess to put it in context to understand just how power intensive the digital economy and data centers are in terms of that shift and the growth into AI, we use Google multiple times a day. And did you know when you're doing a Google search, you're using the equivalent power of turning a light bulb on for 3 seconds? But if you do a ChatGPT search or a generative AI search, which is probably for most of us becoming quite the norm these days, it uses the equivalent power of turning a light bulb on for almost 30 seconds. So that's 10 times the amount of power required for generative AI. And so you can see why, the hyperscalers, the big tech companies, they're so power hungry. And so you've got the combination of the power requirements for data centers. So the big tech want access to power quickly and cheaply, and utility scale solar and wind are the cheapest forms of power to service those data centers and their needs. And you combine that, as I said, the corporate sector is leading the way, and the big tech companies are in that bucket. They have ambitious net zero or renewable energy targets, and so you can see the combination of those two sets the scene for strong commercial as well as sustainability case for renewable power to power this digital age.
Yeah, I hadn't actually heard that light bulb sort of analogy before. That really puts it into context, doesn't it? Andrew, you still remain pretty optimistic about that Marigold's outlook there, and how does the US factor into that for you? What are you thinking about where you're moving your assets and things?
Look, I think some of those kind of really big themes that are driving markets that Marigold mentioned, digital clearly is changing productivity, and investment returns and return on investment are kind of very high in digital assets, depending on kind of the price you buy, of course. But most portfolios, and certainly legalsuper, is sort of following a digital theme. Infrastructure has the benefit as well of the fact that we are expecting higher inflation in the next 10 years than has perhaps been the case for the last 10 years. And in general, kind of infrastructure assets have inflation-linked returns. So that's got another thing going in its favor. And of course, governments are, unfortunately, not the most well-off. They are mostly indebted nations at a time when population growth and requirements for infrastructure build have never been higher. And so the opportunity for private capital and super fund investment to get involved and really drive those kind of assets and get great returns for our members, again, is a really another theme behind infrastructure. Just on the US, I would say at the margin, while we've maintained our exposure to US equities and US bonds, I think the two areas that I feel like lack of policy certainty are making us think twice about continuing to invest in the US dollar. Firstly, is that sort of lack of policy certainty perhaps meaning that the US dollar has for the moment peaked versus other currencies? And I would say also new infrastructure investments. While everything is going in its favor, infrastructure does need policy certainty because it is a sort of a 10, 20-year build to be able to generate those returns. Regulation certainty, state government, local government, federal government, all acting in kind of unison. And, clearly at the moment, it's hard to see that in the US.
Yeah, it can be hard to see it in Australia too, can't it? We don't often get that level of government all working together on the same thing as smooth as we possibly could. I guess you can see that in housing at the moment. There's really great intent, but there is some blockers in levels of government. So I guess I'm reflecting on recently Scott Farquhar made some comments in the media believing that Australia could become a data center market leader. So we're thinking about Marigold's comments about how hungry our co-pilot searches are and our ChatGPT kind of assistance is. the opportunity that might sit in Australia, noting the volatility in the US, and probably we're better placed to power Asia. I've certainly seen also Vietnam have the same ambitions. They're really hoping on the China Plus One strategy will see them be able to uplift some infrastructure. But what are your thoughts? I'd like to get it from both of you really on Scott's comments, believing that Australia could be that data center market leader. And we've got obviously capacity. Have we got policy settings right? We've got capital, but have we got the ability to have that capital flow? Andrew, what do you think?
The ability is definitely there for Australia. Look, I think that whether it be housing or data centers, it's clearly that the Australia has the ability to be a superpower in transitioning from fossil fuels to more renewable energy. We just need to get all the kind of various elements of government linked up, and it's clearly that we have the capital within our superannuation system and the intent to try and to drive this. So I think the first thing I'd say about Australia is we want to do it. We know where some of the challenges are, and we're working through kind of all the different parts of the system to try to build that capital intensive and capital returning environment that we need to kind of to move forward.
Mm. Is it fair to say, Marigold, that the challenges in Australia with that data center vision is on the connection to renewable energy and the grid itself? It's certainly not the space or the building of the, I want to say, shed. Like what the thing that goes over it. Yeah, is that the challenge? And so therefore it's kind of government.
That's a big part of the challenge is access to power. So there are two ways, obviously, to access power. One is to get a grid connection, and that's probably where the challenges lie in Australia in terms of investing further into upgrading and expanding the grid infrastructure. The other way in which we're seeing data center hyperscalers, particularly in the US and in Europe, and I think will be a bit of a trend here as well, is what we're calling following the power. So they will co-locate, sit alongside renewable power projects and access power essentially directly and behind the meter. That gives them access to power, particularly if there's batteries involved, then you get a bit more of a reliable sort of 24/7 type access to power, and that's critical for data centers. They need to have 24/7 uptime. So that's one of the things, that Australia is capable of doing as well, both, upgrading existing grid infrastructure, as well as, getting involved in this sort of follow the power trend. And we're seeing it happen already. So Amazon's already announced that they'll invest $20 billion in upgrading and expanding their data center infrastructure in Australia between now and 2029. And as part of that, they're also investing in 3 new solar farms to power that increased data center capacity. So we're on our way there. We can certainly grow and expand and become, a critical sort of hub for the Asia Pacific region.
And I'm taking you off on a tangent now, but it's quite fascinating to me that a renewable power opportunity becomes a byproduct of a data center opportunity instead of the lead, thing that you're investing in. You're investing in it. Perhaps the opportunity for investors is the investment in the data center that's got a really clear sort of risk return profile because it's got links to corporate Australia and clear sort of tech argument. And a byproduct of that is a solar farm or a wind, generating power source. But then what's the kind of knock-on effect to the whole country and the connection with the grid and the abilities to have this as an aligned kind of vision for the future?
Yeah, this is a theme that we are seeing globally, and it is what's called, I guess, the convergence of the digital infrastructure sector and the renewable power sector. They do have to, coexist. We can't have the data center capacity and the capability to continue to service and grow AI without access to power. And as I said, for those reasons that, solar and wind are cost-effective sources of power generation, as well as, the sustainability goals of, the big tech companies. They pretty much, work in tandem, and they have to have that sort of alignment and relationship. And that's why the two sectors are converging. And as I said, there's the opportunity to co-locate and to have systems that work, in combination. But, a lot of data centers for various reasons around, proximity to market, and the need for reliable 24/7 power. We'll still need grid connection. So there's still a strong opportunity for us as a nation to continue to improve, our ability to permit and, get authorization and building with more grid infrastructure.
I think we're going to need to extend this session at the ASFA Investment Summit, because this is fascinating, isn't it? Like, it's just such an emerging area of discussion and emerging opportunities, not only for the nation, for investors, everyone. I can't let Andrew go without coming back to the returns of Legal Super, and the team must be feeling really good about what they've managed to deliver for the Legal Super members. Andrew, we're looking at Marigold talking about some really massive opportunities there. How does a smaller fund like Legal Super top the charts? I think everyone wants to know that secret, by the way, and then compete so well and get access to some of those bigger opportunities as well? How do you look at themes, noting that you've got the fund is on the smaller side and yet really performing astoundingly well?
I think obviously trustees of super funds have a need to try and deliver best outcomes to, almost just think about your sort of different cohorts of members. You want to deliver best outcomes to your young members, to your members who are in mid-working life, and those that are getting towards sort of retirement, and those that are in retirement. And to be frank, I don't really think it matters whether there's sort of 1 million members in each of those cohorts or whether there's 20,000 members in each of those cohorts. You've got to sort of do the right thing and understand what your identity as a fund is. And I think that's really important, that if your identity as a fund is to be large, then you're going to have an opportunity to participate in some of the largest deals going around globally. But that's not always, doesn't have to be the only place that generates the best returns. If your identity as a fund is to really know your members who work in a certain sector and deliver great quality service and a great outcome through being sort of dynamic and being able to be agile and kind of looking for kind of the best sort of niche opportunities in markets, then you can still play the same themes. I mean, digital doesn't always mean just investing in the biggest hyperscaler data center. You can actually play that theme in lots of different areas. Maybe it's in small caps that the likes of the big funds in in Australia can't access as much. So, I think don't play somebody else's game, play your game, and make sure that you're playing your particular game for your fund and for your members as best as you can possibly do it. And I think that outcomes like Legal Super has shown in the last 12 months show that, knowing what you're trying to do and knowing how you're going to add value and knowing what you're good at still offers a great value add to your members.
Well, that is, it's a good point. It's also, it just reminds me about how different the Australian landscape is. So we've got here, you're an investment professional. Both of you have had a long history in the sector and long history in investing. We all started when we were children. And so to be able to hear people speak like that with such a member first lens as an investment professional is an Australian ism, I think, and something to be very proud of. For listeners, look, there are still some tickets left to our investment summit. If you want to hear an extension of this conversation, I think you'll agree it's a fascinating topic. We're going to pick it apart in more detail and be able to get some audience participation. Go onto the ASFA website, grab your tickets. Thanks very much again for being part of Voice of Super, to Andrew and to Marigold, and to everyone else for listening. Don't forget to subscribe, and we'll see you next time, I suppose. Is that what you say on a podcast? I don't even know. We'll hear from you next time. You'll hear us next time on Voice of Super, ASFA's podcast for the superannuation sector by the superannuation sector. Thanks very much.